IPO space, and the government's divestment agenda gets a further push as Rural Electrification Corporation files its Draft Red Herring Prospectus. The company plans to issue over 17 crore shares, including the divestment of 5% of the paid-up equity. Ritu Jindal has worked out some of the numbers over there, and she's got some details on how much the company can potentially raise at current valuations. Ritu.
That's right, George. The company plans to issue a total of 17 crore shares, like you rightly pointed out. It's a fresh issue of 12.87 crore shares, which comprises of 15% of paid-up equity, and another 5% of the paid-up equity of REC will be the government's divestment. Currently, the government holds around 81.8, that is around 82% stake, which could come down to close to 66% after the FPO comes out. At the current valuations, George, the company can raise over 4,500 crore. Remember last time when we spoke to the CFO and the chairman of REC, they said that they had plans to raise around 3,500 crores. At 3,500 crores, the issue price works out to around 195 rupees per share, which is much lower than the current market price. So clearly the company can command a much higher premium and good valuations for their stock. Out of the total 4,500 crores at the current market price that the company can raise, the government can mop up around 1,130 crores. That's like a decent amount of money. Now clearly the company is looking to raise this money to fund power projects. That it has a disbursements target of 25% year-on-year for the current fiscal. The price band, of course, is going to be decided by the empowered group of ministers, who is headed by our Finance Minister Pranab Mukherjee. The stock currently it trades at around 2.4 times its FY10 price to book and 2.1 time FY11 price to book. It's a slight premium to its nearest competitor, which is Power Finance Corporation, the PFC. Essentially, the premium for REC is because it can deliver a higher return on equity of 20%. Compare that to an 18% ROE for PFC. The company also can command higher margins because of the benefit of the 54 EC bonds that REC enjoys. The net interest margins for REC are well over 3%. Compare that to about 2.5% for PFC. And asset quality is also quite healthy for REC, less than 1% gross NPAs. So clearly the money would be raised for financing infrastructure projects. But yes, it is a step ahead for the divestment agenda for the government. The IPO is likely to hit the markets in the month of Feb, is what the management told us.